Good morning, Brew Daily Show. I'm Neal Freyman.
And I'm Toby Howell.
Today, as Southwest tries to calm a spiraling PR crisis, a refreshed Spirit wants to steal its customers.
Then Klarna filed for its long-awaited IPO. Will investors buy now or wait until later? It's Monday, March 17th. Let's ride.
Welcome back to the week and happy St. Patrick's Day to everyone of Irish descent and pretty much anyone else who wants to have a good time. And there are a lot of you. While only 1 in 9 people in the U.S. claim Irish heritage, about 61% of Americans plan to celebrate St. Patrick's Day. And that means big business for your local bar, which treats the holiday like the alcohol-soaked version of Black Friday. According to Moody's, St. Patrick's Day is the #1 day for beer consumption in the U.S., with sales jumping 174% above the average. Toby, dry January has never felt more distant.
We could not be further away from those early aughts of the year. But I have to call you out for a second, Neal. You're wearing absolutely zero green right now. Just a startling lack of holiday whimsy on display right here. Plus, you are very vulnerable to a leprechaun's pinch, which is actually the reason you're supposed to wear green in the first place. Now a word from our new sponsor, Sophos. Ooh, I am excited to tell you all about Sophos.
Okay, I'll bite. Why are you excited about Sophos?
Well, they provide cybersecurity for growing businesses.
You don't have a growing business, though.
Yes, but knowing that if I did, Sophos would be there to provide enterprise-level tech and real-world expertise to keep it safe, it helps me sleep better at night.
Ever heard of putting the cart before the horse, Toby?
No, I don't see how that is relevant here. As long as I have my cybersecurity figured out, the business part will come in no time.
I am excited to see what you come up with. In the meantime, if you actually own a business, big or small, you deserve enterprise-grade protection with Sophos. Learn more at sophos.com. That's SOPHOS.com.
Klarna, the Swedish fintech you use for buy now, pay later purchases, is finally going public. After years of anticipation and valuation swings and lots of lattes bought in installments, Klarna filed its IPO prospectus on the New York Stock Exchange under the ticker KLAR. Klarna was founded in Sweden in 2005, but became a household name during the pandemic when BNPL helped fuel lockdown-induced online shopping. But like a lot of its peers, Klarna suffered from rising interest rates and a VC bubble bursting. In 2022, it raised funding at just $6.5 billion valuation, an 85% drop from the $45.6 billion it was valued at a year before. But recently, Klarna has bounced back, bringing in $2.8 billion in revenue last year and net profits of $21 million, a sharp turnaround from heavy losses just a year earlier. Its 1-year makeover has given it the confidence to explore this long-rumored IPO, where it is aiming for a valuation of about $15 billion. Neal, this is a company that arguably might be more interesting for what's going on behind the scenes. Klarna has embraced AI wholeheartedly, replacing 700 full-time customer service agents with an in-house AI chatbot, as well as multiple large SaaS vendors. And now it's riding that increased efficiency into the public markets.
You're absolutely right. There's a lot of juicy storylines to dig into with Klarna's IPO. The A plot is the IPO of a major fintech company and one of the few buy now, pay later giants to go public. The B plot is this major test for AI's promise to transform the workforce. As you mentioned, Klarna has bear-hugged AI like few other companies have. It's been developing its own in-house AI system based on OpenAI's ChatGPT, and its CEO has said the quiet part out loud. While many tech CEOs, when asked about whether AI will replace human workers, they kind of hedge a little bit and they'll say, no, it's a complement and we want our human workers to work alongside AI. He's come right out and said that he hopes, he's bragged that AI will automate his workforce, and he hopes to dwindle his workforce from 5,000 people working at Klarna at a peak to ultimately just 2,000.
Right, and I do think that he is not someone who shies away from controversy either. I mean, saying that you're replacing 700 full-time contract employees to save $40 million annually, that's not usually a popular talking point, but to him, that's exactly where he wants to take this company. Now, some people who have worked at Klarna before have pushed back and said that, hey, maybe this narrative around AI is more of a gimmick than actually something he truly believes in, because what's a great way to cover up your workforce workforce dwindling from 5,000 in 2023 to 3,500 by the end of 2024, to say that, no, it's not because, we wanted to lay people off. It's because we're replacing them with much more efficient AI. So it's definitely, he's putting his neck out on the line saying this is what we think the future of business is. And you can't really argue with the results. It did have a remarkable turnaround in profitability right around the time where AI became big. So maybe he is putting his money where his mouth is.
Now, in terms of buy now, pay later, that sector that has grown a ton over the past 6 years or so, where you can pay online in installments, had that big boom during the pandemic. There was that big slump after the pandemic, but now it's coming back in a big way. It is still very popular. I mean, just look at the recent holiday season. From November 1st to December 31st, the usage of buy now, pay later services jumped nearly 10% year over year, amounting to $18.2 billion in total online spending. That's about 7.5% of overall online sales. So as much as people bought over the holiday, 7.5% used buy now, pay later. Klarna, Affirm, Afterpay are the giants in this space. Whether they will be successful on the public markets is a different question entirely. Affirm went public a few years ago, and its stock has fallen 57% since its IPO, and the market is quite turbulent right now. It's not exactly the time when a big company would want to go public. So we are watching to see whether Klarna will actually go public or get cold feet in the next month or so.
That's probably the C plot. I mean, we've already taken us through the A plot and B plot. The C plot is just the health of the overall IPO market, which right now there's a lot of volatility. There's some plunging share prices we've seen earlier in the year. So it's been a pretty cold market, which a lot of people thought that under this current administration, the IPO market was going to come roaring back to life. There are signs of life. Klarna is a big one. There's another company, CoreWeave. They operate data centers. They're filing for an IPO, and that should value the company at more than $35 billion. So it's been a kind of rocky start to the year for the IPO market, but Klarna is one of those names that could, turn around the whole year if it goes well.
You are well aware that stocks have taken a bruising from the rapid-fire tariff announcements coming from Washington, D.C., but there's been another high-profile casualty of the policy uncertainty, the U.S. dollar. The greenback is having its worst start to a year since 2008, declining more than 4% since New Year's Day. The slump, depending on how long it lasts, could have dramatic impacts on everything from Fed rate cuts to inflation to where you decide to go on vacation. At a very high level, the strength of a country's currency reflects demand for that currency, and by proxy, the expectation of economic growth. Generally, if your currency is gaining, it means your economy is looking good. Congrats. And that's been the story for the U.S. dollar for more than a decade, as America's economic growth has sailed past those of peers like Europe. But events of the past few weeks have shaken those foundations. Trump's trade war with every country on earth, combined with Europe's massive spending plans to rebuild its military and infrastructure, have been ripping through currency markets, sending the dollar to its biggest weekly loss against the euro since 2009. Toby, the dollar is looking a little less almighty.
Right. Some of the reasons why the dollar has weakened, one, it has been those steep increase in tariffs, but also it is what's happening in Europe that is causing this surge of optimism for that particular economy, which has driven the dollar down sharply. The Wall Street Journal's dollar index has declined 7 of the past 9 weeks, and the dollar affects so many things. Obviously, global investment flows is a big one, but also you said the direction of transatlantic tourism. If the dollar becomes weaker, certainly maybe more Europeans are going to head our way instead of vice versa, which has been, the status quo for the last decade or so. So what are some implications of a weaker dollar? One, it might make imports from places like China more expensive, which could potentially actually lead to a boost of inflation, which could make it harder for the Federal Reserve to cut interest rates. So you start to go down the line and you see how these dominoes start to fall if the dollar is weakening in comparison to global currencies.
Yeah, strong dollar, which has been the case for a long time, is great for American vacationers abroad. Recently, the U.S. dollar last year hit its highest level versus the Japanese yen in 34 years, which led to a huge surge in tourism to Japan for the food. And last week we talked about the skiing as well. So why does Trump and J.D. Vance, who's the vice president, want a weaker dollar? They've been very vocal about wanting a weaker dollar, and that's because it would boost American manufacturers and exports. if the dollar is strong, it makes us selling goods abroad much more expensive. The U.S. consumer would be the victim of that because you're right, strong dollar does make things cheaper for American goods. Buying stuff from abroad, a weaker dollar makes stuff more expensive.
This is something that has happened before. In 1985, there was a group of governments. They got together and agreed to something called the Plaza Accord. That was against this similar backdrop where U.S., France, Japan, the U.K., and actually West Germany at the time all agreed to collectively devalue the dollar against their currencies because they thought the strong dollar was hurting the global economy. And that was against a very similar backdrop, which was high inflation, high interest rates, and a very strong dollar. So maybe Trump administration is looking back to that era and saying, this is exactly what we need to have happen. The strong dollar is hurting Americans as they try to, shore up manufacturing again. So this is not something that is potentially accidentally happening. It's a very intentional policy decision by this current administration. Spirit Airlines is back from the dead. The budget airline known for its bare-bones flight experience said it has finalized its debt restructuring and is ready to emerge as a beautiful yellow butterfly from Chapter 11 bankruptcy. What was the first thing it did after finding itself on more solid financial footing? Pick a fight with one of its rivals. Remember when Southwest shocked the world last week by announcing plans to ditch its bags fly free policy, a decision that was maligned by analysts and customers alike? Well, Spirit CEO Ted Christie decided to jump onto the dog pile as well, saying, I think it's going to be painful for a little bit as they find their footing, and we're going to take advantage of that. But even as Christie is throwing shade at Southwest's way, Spirit still has some ducks it has to get in a row. It still reported a net loss of $1.2 billion last year, more than double the year prior, and it's been the subject of not one but two doomed merger attempts, courtesy of Frontier Air and JetBlue. So yes, Neal, Spirit has got some pep in its step, but it's not like it's just smooth sailing ahead.
No, it is much smaller than Southwest Airlines. The way Spirit thinks it can win in the new aviation market is by moving up market. It is now offering flight options with tiered prices, so you can pay more on Spirit to get extra legroom, which is a policy it didn't have before. It's selling these bundled fares that include bigger seat, priority boarding, free bags, internet service, snacks, and drinks, which is a big departure from its previous strategy of just selling these a la carte seats so you can pay for every single little thing. Now it's bundling things together, and you've seen airlines jockey for position here. Upscale travel is what is making money right now. These Delta has rolled out, Delta has these lounges and the business class. Like, that is where the money is had right now in airlines, and Spirit thinks that it needs to skate where the puck is going to win back customers.
And you did mention that Spirit is still a lot smaller than its rival. It's definitely punching up right now when it's going after Southwest. Southwest averages 3,600 flights per day. Spirit averages just 700 per day. So this is definitely one of those things where I think it's more of a marketing stunt in a way. Although I will say that a lot of airline CEOs have come out and say, we do think Southwest's customer base who were attracted to those bags fly free policy is up for grabs right now, because that was the main reason people were opting for Southwest, as well as, it is the U.S.'s largest domestic carrier. But I think that all these CEOs are licking their chops and saying, all right, this is a very disgruntled fan base right now. Of course, I'm going to go out in interviews and say, we're coming for your customer base. Come check out Spirit, because, a lot of people were mad. I mean, this is a little bit of an exaggeration, but these are both Texas-based enterprises. Luka Doncic trading to the Lakers and Southwest getting rid of their bags fly free policy. It created similar levels of fury and uproar from specific customer bases. So, of course, you're going after these angry customers right now. Up next, it is our winners of the weekend.
Welcome to Winners of the Weekend, the Monday segment where Toby and I pick two things that had a better weekend than Rick Pitino. Toby, you won the pre-episode fashion show, you catwalk queen, so you get to go first.
It's because I'm wearing green, Neal. Holiday spirit never goes out of style. My winner of the weekend are NASA astronauts Suni Williams and Butch Wilmore, who are about to be reacquainted with a little thing we call gravity. The pair of now infamous astronauts are set to return to Earth after spending 3/4 of a year aboard the International Space Station, far exceeding their originally planned mission due to technical issues with Boeing's Starliner capsule. NASA insists that the pair has not been stuck this whole time, but were intentionally kept hanging in zero Gs for technical and budgetary reasons. The pair's replacement Uber home was actually delivered by SpaceX last year, whose Dragon capsule has been in orbit for months now, but a separate SpaceX Crew Dragon arrived at the ISS yesterday morning with 2 new astronauts, clearing the way for them to head home. A splashdown off Florida's coast is expected later this week, as long as the weather holds. Neal, just to reiterate how insane this trip was, Wilmore and Williams expected to be gone just a week when they launched on Boeing's first astronaut flight. They hit the 9-month mark earlier this month.
Williams and Wilmore have been true champs about all of this, saying that they love being in space and that they're not stranded and that they're staying occupied, and NASA has provided everything for them that they needed on their very much extended stay. And that may somewhat be genuine because astronauts don't get that many chances to be in space. So they've both spent a quarter century at NASA, and they've only been to space twice, and so it's unlikely or doubtful whether they'll be going back to space. So for them, this might be their last chance. They've worked their entire life for this. This might be their last chance to ever be in space. So yes, they've had a few months more than planned in space, but I think they're thinking to themselves, this is my last chance. I'm not going to be able to go back to space, so might as well enjoy it while I'm here.
That's a very optimistic take. One more pessimistic take is the fact that we talked about budgetary concerns. So what is the budget for keeping 2 astronauts in space, 9 months instead of 9 days as was originally planned? They're not getting any overtime or additional compensation above their usual salary for the extra months that they've spent working from space. This was according to a former retired astronaut who's familiar with how the government structures these contracts. So I don't know if you imagine you were meant to be on a project for, a week and then instead you ended up working in 9 months. You're right. It is space. It is a very cool place to work, but they're not getting, that overtime pay that you might expect given their situation.
So looking ahead in the next few days after this crew switchover happens, Williams and Wilmore will eventually descend to Earth, hopefully barring any weather mishaps here on our blue planet, and they will return to their families. We can't wait for them to do that. My winner is law schools because they are swimming in applicants. According to the Wall Street Journal, the number of people applying to the U.S.'s nearly 200 law schools has surged 20.5% compared to last year, making it one of the biggest influx of applicants in recent memory. Some schools, such as the University of Michigan, have seen demand surge even more, up 30% annually, making it their most competitive year on record. There are a number of factors contributing to the spike in aspiring 1Ls. One is the current tough job environment for white-collar workers. When your employment prospects are dim, you go to grad school to level up. Another could be more tech-related. Law offers the prospect of a stable, high-paying career at a time when AI advances are threatening certain professional services positions. Also helping, the LSAT tweaked its test, which could have attracted more people to take it, and law school applications have historically jumped in election years when the legal profession is in the spotlight, as it is now with all the cases surrounding the Trump administration's executive actions. Toby, while this is great for law schools, it is not great if you're applying to one.
Yeah, people were saying that when they saw the amount of applications roll in, there was gasps in the room at some of the top law schools. They couldn't believe the numbers were as high as they were. I was doing a little bit of digging and just reading people's reactions as to why they think it is. Obviously, there's all those factors. Yeah, tough job market, election year. These are all things that, pull people into the law profession. But the changes to the LSAT were probably the biggest thing here. They took away the logic game section, which for a lot of people it was just a brutal section for most of the test takers. So now people are saying, I'll take the LSAT. Now that this, horrible section is gone, I'll give it another shot, which is why you saw so many applicants, because you might as well give, if the test got much easier, you might as well give it another shot. Some people are saying their scores jumped 15, 20 points on this revised test. So I do think that was a big factor with why we're seeing these massive application numbers.
And we are seeing massive application numbers. I mean, if you're applying to law school, I will say good luck. Georgetown University Law Center received 14,000 applications to fill 650 spots. University of Michigan will take 320 people in this class. They received more than 8,900 applications. So you're right, the floodgates have been opened and law schools are about to see their acceptance rate drop dramatically. Okay, it is Monday, so here is what you need to know about the week ahead. The Fed is meeting on Wednesday at a pivotal point for the economy, with tariffs and potentially higher inflation spooking investors. Stocks posted their worst week in 2 years last week, and the S&P 500 briefly fell into correction territory, down 10% from its record high. The Fed is not expected to lower interest rates as part of Jerome Powell's wait-and-see approach, but of course his press conference will be appointment viewing for his thoughts on the market mayhem.
Yeah, I mean, if you're talking about an economy right now that is gripped by a lot of uncertainty, one thing seems pretty certain, and that is interest rates will stay where they are. The wait and see approach has been something that we've seen echoed a lot from Jerome Powell, because there's just so many economic policies that are up in the air right now. So it's very hard to make, an interest rate decision before you understand which tariffs will go into effect and which won't, which are just bargaining chips and which are not. So wait and see is the name of the game right now.
Disney's live-action adaptation of Snow White hits theaters on Friday, but what should have been a slam-dunk blockbuster has turned into a colossal dumpster fire. Disney dramatically scaled back promotion following an unending string of controversies since the project was first announced in 2021. The movie is going to cost Disney $450 million all in with production, advertising, and prints, and it may be lucky to make back even a fraction of that.
Right. It is one thing that you see these movies do when you invest so much money into creating something like this is you start selling tickets like a month in advance, a month and a half in advance to try to start recouping your investment. Right now, Fandango only started selling Snow White tickets just 10 days before its release, which just shows how much Disney has kind of shrunk this movie from the spotlight. It had this very toned down opening premiere. So it is one of those things where it could end up being a big egg on the face moment for what should have been just, pretty much an easy tentpole franchise for Disney to prop up.
The NCAA tournament begins this week, which means it's time to acquire a second or third monitor at work and start developing intense opinions about colleges you only learned about earlier in the day. After the play-in games today and tomorrow, the men's tournament gets going for real on Thursday. The top 4 seeds are Auburn, Duke, Houston, and Florida. On the women's side, the top 4 seeds are UCLA, South Carolina, USC, and Texas. Toby, the best week in sports has arrived.
I'm very excited right now, and I know a lot of you listening probably aren't sports fans, but do fill out a bracket, and you might be thinking, what is my chances of, snagging that elusive perfect bracket? It's 1 in 120 billion, so good luck to all you. Maybe flipping a coin is the way to go.
Also in sports, the baseball season will soft launch in Japan this week when homegrown superstar Shohei Ohtani and the Dodgers take on the Cubs over 2 games. To give you an idea of Ohtani's ridiculous popularity in his home country, tickets at the Tokyo Dome are going for as much as $2,000.
I mean, it truly is the Eras Tour of Japan right now. Ohtani is the biggest face in baseball right now. MLB is trying to expand its global reach, so it makes a ton of sense for them to do a little stint over in Japan to start the season.
And finally, in related news to baseball's return, the first day of spring is on Thursday. Boy, am I glad to see you.
I am glad as well, but I will caution you because New York actually has a lot more seasons than just 4. There's winter, there's full spring, there's second winter, and then there's spring of deception. And right now I feel like we're in the spring of deception because we got some 60-degree days, but I think we're going to get plunged back into one more winter before spring is actually here.
All right, let's wrap it up on that high note. Thanks so much for starting your morning with us. Have a wonderful Monday and a very happy St. Paddy's Day. For any questions, comments, or feedback, send an email to morningbrew@morningbrew.com. And if you're enjoying the show, share it with a friend, family member, or coworker. Toby, who should everyone listening share it with today?
I want you to share the podcast with someone who is considering law school. It might be good to arm them with some facts as to what they are up against.
That is a very good point. Let's roll the credits. Emily Milliron is our executive producer. Raymond Liu is our producer. Olivia Graham and Olivia Lake are our associate producers. Uchenna Ogu is our technical director. Scoop Stardaris is on audio. Hair and makeup is Splitting the G. Devin Emery is our chief content officer, and our show is a production of Morning Brew.
Great show today, Neal. Let's run it back tomorrow.